down to 2 to 2.5% where we are today. So these patterns match, even if the month-to-month movements, both in this income data and certainly in the employment data series, might show wilder swings. When you look at it in the big picture perspective, there's no question we're still growing and outperforming the typical state. It's just we're transitioning down from peak growth rates to something more sustainable over the longer term, or at least that's what's built into our forecast, and it's coming to fruition relatively well in recent years.
So as a result, our outlook for the current biennium has not changed much. Here you see combined general and lottery fund resources up just under $50 million for the current biennium relative to the forecast that was made 3 months ago. So things are pretty stable here. This growth relative to the close of session, you see the close of session is May plus the red part, which are the revenue enhancements that were passed by the legislature during the session. We're above that a little bit now, but all that is due to additional lottery funds. In terms of our basic general fund income, corporate personal income taxes are right on par with what was expected at that time when the budget was crafted. So just a little bit more lottery resources is really the main change since the budget was written. Going forward, we expect bigger increases relative to the September forecast, $160 million in 1921 and $108 million in 21-23 and $124 million in 23-25. Really two parts to this. The biggest is this increase in corporate, the outlook for corporate tax collections. While corporate tax collections are tracking the forecast really well, corporate profits are coming in above forecast pretty regularly, and the outlook for them from our vendor has been revised up. And so larger growth in corporate profits throughout the forecast period and the out years here is translating into some significant revenues as we go forward. There's also in the near term some impact to personal income taxes, some increases in the personal income tax collections. And a lot of that has to do with what we saw during the extension filing period. In the fall, a lot of Oregonians who are high-income households turn in their tax returns. Although they make their payments in April, just like everyone else, when you have a big, complicated return, they tend to be amended or extended into the fall before they actually turn them in. And so we've finally processed these and started to have a couple surprises this year. In particular, it was a really big year for these year-end, not necessarily payments and collections, but the reporting of income. There was in two parts. There was a lot more wages. Again, these are typically the high-income households. There are a lot more wages than there typically are that are reported at the end of the year relative to what's been reported before. And there was a whole lot of pass-through income, particularly stuff on your Schedule E. So that's rental income, S corporations, partnerships, stuff like that. We really never seen such a big end of the year relative to what was going on before, which was already a really big year for this sort of pass-through income. And so this has increased this, our perception of the size of overall tax liability in Oregon today, and so this carries forward somewhat into the outlook.
Senator Boquist?
I'm just curious, because that is a fairly significant change. You guys have any guess of why, we'll just say, more affluent individuals are taking money as wages versus dividends or anything like? Any idea why you think they're doing that?
Yeah. Sorry, Chair Haas, Senator Boquist. Yeah, that remains an open question in terms of this year and the reporting. When we asked this of our accounting group and whatnot, and they do believe that I think some of it has to do with just the increase the amount of growth in this stuff. Now, wages less so, but wages are just bigger. But in particular with that Schedule E, it's been growing so fast over the past few years and arguably concentrated in high-income individuals that we're just seeing numbers like we haven't before in terms of what's coming in at the end. Wages a little less less certain in terms of what's going on, why people would defer and wait. I picked through the data a little bit, looking at folks that were subject to measure the higher rates, Measure 66, and those who weren't. And over the last year, the Measure 66 types did see significantly faster wage growth than others in terms of the tax returns. Now, that hasn't been borne out in our income data, so it was a bit of a surprise.